Good afternoon and welcome to the weekly livestock market update on Brownfield. I'm Brownfield Anchor reporter Brent Barnett, filling in for Megan Grebner this week. Joining us as always is University of Missouri's Scott Brown. Scott, how are you doing today?
I'm doing great. Last Friday of the year, so ready for 2024.
Yeah, it's an exciting time leading into the new year. How was your Christmas holiday, Scott?
It was very good, relaxed. I guess I could take another couple of weeks off, Brent, if you gave it to me.
Yeah, no doubt about that. Well, like we said, it's the last Friday of the year, and I know we're going to be looking ahead to 2024 throughout this interview today. But first, Scott, let's just get an update what we saw this week in the markets.
Yeah, so we saw a pretty limited markets for the most part. If we start on the cattle side, I'll call cash-fed cattle $2 higher this week. Those feeder cattle markets, most of them were closed for the holiday week, so we really don't have any new news to report there, and it'll be pretty short next week as well, given Monday will be New Year's Day. On the future side, so February live cattle futures contract was basically unchanged on the week. We did see the January feeder cattle contract up 80 cents this week. On the beef side, choice box beef prices were about $1 higher this week. Looking at the hog side, cash barrels and gilts down about 90 cents this week. February lean hog futures was down pretty hard this week, down $3.10. I think the Hogs and Pigs report had some negative ramifications for futures markets on the hog side this week. And the pork cutout value was up 80 cents. Both hams and bellies were higher this week.
Any surprises in the weekly number, Scott?
So not really. I'll say I think we kind of shrugged off the cattle on feed report from last Friday, found enough positive to really not do too much to markets. I think the bearishness in the lean hog futures contracts this week certainly reflected what was stronger productivity out of that hogs and pigs report. But I don't really see any big surprises. And again, I think we were, pretty short in terms of much market activity this week.
Let's move over to the slaughter numbers. What did we see there?
Yeah, so USDA is saying for the week ending December 30th, a run of 508,000 head of cattle this week. That's down 113,000 from last week. Of course, with the holiday week, that's not surprising. We're also down 27,000 head from where we were a year ago. And on the hog side, a run of 2.33 million head of hogs this week. That's down 187,000 head, but up 49,000 head from the same week a year ago.
What do you make of that year-to-date change in cattle slaughter?
So I think we're continuing to talk about shorter cattle numbers. We're down 4.2% when you look at year-to-date cattle slaughter. It's going to drive total meat production to be lower for the first time in a few years for us. So despite what's a 2.1% increase in year-to-date hog slaughter, the reduction in cattle slaughter is enough to talk about less meat production here in 2023.
While we have a few minutes here left in the program, Scott, I wanted to take a moment here to discuss, the outlook for the 2024 cattle and hog markets. And, before you really get into that, could you first maybe reflect on the year 2023 and what we saw in the cattle markets?
Yeah, so what a phenomenal ride in cattle markets for most of 2023. I sometimes say if I would have predicted where prices were by the time we got into the summer months, I think a lot of folks back in 2022 would have laughed at me for giving us such high prices. Now we lost a little bit of that strength here at the end of the year, but frankly, although I don't like losing price strength, it's not completely surprising. This volatility that we've seen in 2023 is likely going to be with us as we look forward into 2024. But who would have thought we were going to talk about these kinds of prices? And then looking forward into 2024, I keep saying perhaps we're not done with record cattle prices. That may take us late spring, early summer. But to me, it looks like at least at the feeder cattle level, we could start to crowd back to those record levels pretty easily. We'll have to wait and see. But I think 2024 is another shorter year of beef production, maybe not quite as much of a decline as we would have suggested 6 months ago in predicting 2024, but certainly still down. The hog side, hogs and pigs didn't help us a whole lot here when we look at the report and think about 2024. And I guess I should also remind us 2023 hog prices certainly lower than many of us would have thought when we started into 2023. I think we look back in the rearview mirror and do a good job of reminding everyone that 2021 and 2022 were both really good demand years. And as we lost a little bit of that strong demand, lowered hog prices in 23, you look forward, if demand kind of stays where we've been in 2023, looks like pork production won't be all that much different than what we saw in 2023, given, again, productivity gains that we saw out of the last Hogs and Pigs report. We now have got 3/4 of data that suggests we're growing pigs per litter pretty rapidly. Anecdotally, I hear the same thing from some hog producers who have gotten through some of the worst, or what they hope is some of the worst of PRRS in their herds. And so less optimistic about hog prices in 2024, sideways. But maybe feed costs is what makes the bottom line better for hog producers. We'll see where corn prices go, but good crops ought to keep putting pressure on corn prices to go lower.
We're talking with Scott Brown with the University of Missouri. Scott, just a few more points here on the program today. What was the latest on the Restaurant Performance Index?
Yeah, so Brent, we got some good news, not too surprising, just given how the general economy's been performing of late. The November 23 Restaurant Performance Index came in at 100.1. I remind us anything over 100 is growth, anything below 100 is contraction in that index. That's a 0.4% increase in the index from October to November. When I look at some of the components, I think this is where the interesting piece of this latest index comes in. Same-store sales for November were up 4.7% relative to where they were in October. So some really nice recovery in same-store sales. Even customer traffic moved in the right direction. It was up, but that's what really helped us, I think, move the overall index forward in the November results. Expectations were up a little bit as well in the November numbers, but that same-store sales really jumped out to me this month.
Well, we'll keep an eye on that moving forward. What's coming up that we need to be paying attention to? Any reports to highlight?
So we will get a jobs report right out of the gate here after the first of the year. That comes out next Friday. And otherwise, not a lot of big reports. I keep saying the next big one for me is cattle here at the end of January. See how much beef cows are lower. When you look at some of the beef cow slaughter numbers of late, it might suggest an even bigger reduction than we would have thought just a few months ago.
Well, Scott, thanks a lot for all of your insights this year and for being with us each week. We really appreciate it.
Thanks a lot, Brent.
To have our weekly livestock market update delivered to your email inbox every Saturday morning, just go to brownfieldagnews.com. You can also submit questions and comments. And for updates on what happened in the commodity markets daily, be sure to check out the Market Minute from John Perkins. We all hope you have a happy new year. I'm Brent Barnett with Brownfield Ag News.